Hello. Thanks to all of you around the world for attending our live webinar, specially designed for our InterAnalyst subscribers. Now, I want to go ahead and let you know that this video of the presentation will be available later, so you can come back and view it in your private subscriber area. I want to touch base on some things that we've taught in the past. You may have seen them in our videos years ago or in recent time by just looking. But I want to cover the 3 secret truths. This particular day, we're going to cover secret truth number 3, and we're going to learn what it means in today's market and see where the markets are going to go. So I want to start by saying this. Most people do not realize bear markets can delay and destroy your planned retirement. A $100 bill, if you can see through a decline in the market, like we show here, 50%, which is a typical bear market. We'll talk a little bit more about that here in a few minutes. Historically takes between 1 and 3 years. Many of you remember 2000 to 2003, it was roughly 50%, a little bit greater. And so takes between 1 and 3 years. In 2008, it took about a year and maybe a quarter at the most to get there. Now, in order to recover, so we go from 100 to 50 and we lose 50%, we're at $50, okay? From there, in order to get back to even, it has to grow at 100%. So you have to go from $50, you have to add $50 to equal 100 again. This time frame, depending on the market, typically takes between 5 and 7 years to recover. So if you add it up 1 to 3 years and then an additional, let's just say it even was 5 years, we're talking quite a bit of time in your retirement life to recover. Okay, we don't want that to happen. We want to be able to protect that. But there are proven bear market facts since the tulip bulb crash of 1634, which was 90%, the South Sea bubble of 1711, which was down 90%, the Florida real estate crash of 1926, which was 76%, and the Asian crisis of 1989, which was 63.5%. And our current market that started in 2000. We'll cover that here in a second. I promise you that no one has ever shown you the charts that you're going to see right now. In fact, they hide them. There are a minimum of 3 massive bear markets in a lifetime. If you look at the upper blue chart there, that's 1902 to 1927. That's the Dow Jones Industrial Average. That's 19 years of those people's retirement accounts that went sideways and up and down. Imagine the emotional devastation. Now you see why in 29 people were throwing themselves out of buildings, okay? That's the reason why. Now, in this chart here, this shows you that in 1965 to 1980, we had the same thing. In fact, the largest decline is always the third decline. In this one, it went down 67%. Think of that. Your retirement account today going down 67%. And we're in our final period right now of this particular three-sectioned decline. 2000 to 2015, as you can see. Now, number 3 hasn't occurred yet, okay? So let's take a look at the next slide here. Each of those 3 has a minimum of 3 separate declines of over 40%, as you can see here, okay? As you can see here, 1, 2, 3, 1 and 2, but the third one hasn't occurred yet. We're not quite there. So let's take a look at that. The third decline has always proven to be the greatest. Okay, so it's always proven to be the greatest. So as you see here, the greatest. As you see here, oh, we haven't seen that one yet. That is coming. Fact, the declines extend time to retirement by a minimum of 21 years. So if you look and you think about what we just spoke of, you have one massive 50% decline, another massive 50% decline, and now we have a decline that's even bigger coming. How long will those 3 have delayed your retirement by the time it happens? In other words, if you don't avoid this next third decline, where are you going to be at? What if these never occurred from 2000? Imagine where you'd be at, okay? Or if you could have avoided the prior 2, where would you be at? Add that up and avoid the next one, and you see what you can be in position to receive in terms of gains. So let's take a look at one more slide here. 2000 to 2016, that total period of time could delay between 15 years and 21 years, and maybe even longer in some cases. And that third decline is just in front of us. We don't know when it's going to occur. We're getting pretty complacent. You know, based on the market and what people are saying, a lot of people are pretty complacent. They think they're going to be fine. They're ignoring those rumblings, okay? Most people think this is just a brand new bull market. It's going to last forever. Let me make this point to you. They never last forever. Bear markets always occurred. We've just seen the charts that prove it historically. We've seen the bear market crashes that date back to the 1600s. Okay, they don't last. There are 3 in every person's lifetime. Okay, so most people don't realize what it takes to recover. I ask you, can you afford, right now, can you afford another 50% crash? I don't think so, but maybe you can. So is the crash coming now? Well, let's take a look and see whether it is or not. At least let's take a look and find out what is coming. Let me go ahead and share another screen with you real quick and take a look at the charts and what they're showing you. Now, what I want to cover here is more than just the chart. Because you know, as an InterAnalyst subscriber, you've gotten an arrow, and you could see the arrow right here when it occurred. What we are doing right now is just showing you what volatility does to the stomach. And since you become a subscriber, you kind of started to watch a little bit more, maybe expected more to happen, or got really excited. And then you know, over the last few months, you've been questioning, wow, what's the market doing, or when's it going to explode? So what I want to just show you is what volatility really affects. If you watch it daily, as you can see here, look at the insanity. Now this shows 2015, so we're even back into 2014. We're in this trend channel. So for the last 2 years, I don't blame you. Even I question what's going on here. What's happening? The reality is we're determining whether we're going to be in a breakout, whether we've really started that breakout and going north, or are we going to go south again and enter that crash? I want to let you realize, if you watch this every day, look at the insanity. Each one of those charts probably represents your nerves and an ulcer. So just understand, don't look at this daily. It's much simpler to look at it on a broader, longer term basis. Don't change your philosophy, just change your entry and exit points. And here was our entry point, okay? So our most recent entry point. Let's take a look at the same exact chart, but on a weekly basis, okay? We'll go weekly, and now you're going to see a little bit more narrow trend. This shows all the way back to the 2009 bottom. I'm going to go ahead and bring it up a little bit more to date. And you can see all the way back to the 2014 time frame here. Okay, the volatility has been substantial, even on a weekly basis. Okay, so it looks like it's crazy. Now let me cover these charts here real quick, these bars. The reality is that since we started our uptrend with the arrow, if we take a look at this black bar, what it is telling us is that the likelihood is, if this market comes back down below this black spot, the likelihood is that it's going to have to come back up, or it might head down to this bar. But the real worry is if it ever gets to here. If it hits this, which is just above 1800, watch out below. That's where we get a very, very serious indication that this market could be falling apart completely. Okay, so we have 3 little areas here, 2 of which are minor adjustments to the downside. But if it never gets through here, we're looking at continued bullishness into the future. So that's optimistic. So if you watch this on a weekly basis, of course, we just looked at the daily, you know what that can do to you. And if you watch it on a weekly basis, it seems just a little bit more palatable. Not really, if you actually did this, but it is a little bit more palatable as an investor. But now let's take a look at the monthly, okay? Because this is where reality comes in. We can go back to 2009, take a look at the way the charting goes here, the tops here. Okay, if we break out above this line, which I haven't extended, we're really exploding. So the reality is on a monthly basis, since we hit the bottom and got back into the market, we've seen some nice sustained growth, okay? And you can see that the volatility has been much, much less. But if you are looking at this area here, as we talked about, on a daily basis, okay, you can see that it's been insane, okay? So it's been okay, but you can see by following it daily, it can really wreak havoc on your emotions. So don't watch things daily. Rest assured that what you need to, oops, let me change that to monthly. What you need to do is just follow the arrows, relax, treat this like buy and hold 2.0. Hang in there, relax, let the market dictate what it's going to do, and realize if it does turn down, you will get an arrow. Don't fret it. It may not come when you want it to come, but it will come when the market dictates it and the algorithm tells us, hey, watch out, get out, preserve your capital. Okay, so I wanted to bring you this information to let you know that right now the current trend is bullish. I can tell you on an opinion basis that September, October usually equal an adjustment or a kind of a decline. I don't know how severe it will be. We don't know that. Just hang in there. Let the system dictate it. Follow the arrows and don't fret the day or even weekly information. Okay. Use the wealth maximizer if you need to on the weekly just to see what the momentum is doing. But hang in there on your wealth preserver signals. You'll never regret you did it. You'll be miles ahead in the future because you'll be able to avoid 50% declines. And mark my word, I'm going to tell you this. It's not a matter of if a decline is coming. It's never a matter of if. It's only when. So while you hold and the markets are moving up and you're thinking, boy, this subscription is really doing me good, but the markets are going up. I think I feel good about it. Reality is this. You never know when that market is going to change, and it can change in an instant, in one day. So be sure to check your signals at least once a month at the end of the month. If you want to check them weekly, go ahead. You will get notification of a market alert, an emergency, or a new arrow when that happens through the market alerts and through email. So I thank you for attending this month. I hope you enjoy it, and we'll speak to you next month. Thank you very much.